So the question of what separates Bitcoin from other cryptocurrencies, because when I initially covered cryptocurrencies years ago, my biggest issue was, okay, so Bitcoin's neat, it's got a hard cap of supply, but anyone can fork the protocol, make their own version. Someone can come along and copy it and change the rules a little bit, make their own version. And so my concern was that if Bitcoin or another big cryptocurrency doesn't capture most of the market share, then any capital that goes into space could become very diluted among multiple projects. We tend to see that happen during bull runs. They have what's called alt season, where capital starts pouring into some of these lower quality projects. And then usually in the bear markets, it goes back to Bitcoin. My question was long term, what's kind of preventing that from diluting the industry? And when I did more research on it, I basically determined that Bitcoin probably has reached a critical mass of network effects. And if that's the case, they can accumulate a lot of long-term value, while these other protocols, don't really play much heed to it. And so, from my perspective, there are only two protocols that have kind of a meaningful network effect, and those would be Bitcoin and Ethereum, and those are quite different. And so we don't really see necessarily a lot of competition there, although they do have some overlapping areas of competition.
You posted a very, very interesting statement right there, Bitcoin and Ethereum. And there's a lot of talk right now of uh, Ethereum flipping Bitcoin, especially right now that they're trying to treat their scalability issues. And with ETH 2.0 coming in the next few quarters, proof of stake might address all of that. So are you in the school of thought that, okay, they're the two biggest, but eventually ETH could possibly overtake Bitcoin as well?
I mean, anything is possible. It's certainly possible. It would have to outperform by quite a bit in order to catch up with Bitcoin's market cap. The challenge that I see is I actually view this period between now and whenever Ethereum 2.0 is launched to actually be the bullish part for Ethereum, because they've kind of created a supply shortage. And so the way that works is, right now they rolled out the Ethereum 2 beacon chain, which means that it's essentially a smart contract that people can put their ETH to and start staking it, but they can't withdraw that ETH. It's stuck in there until they do the Ethereum 2.0 transition. And so that's basically a supply sink, is turning liquid supply into illiquid supply at the same time as they introduce that EIP 1559 change, which results in less supply or potentially even a slow destruction of existing supply. And so that combination is actually pretty bullish for price over, say, the next 6 to 9 months. But then, ironically, it could be like a sell the news event, because buy the rumor, sell the news. Because when they actually launch Ethereum 2.0, all those liquid coins would be able to be sold, and so we don't know how that's going to affect the market. And so, I have long-term concerns or questions about Ethereum, because I don't view it as decentralized or rock solid secure as Bitcoin is trying to solve more problems and be more things. And so I view Ethereum more like an equity, where I'm analyzing, say, the main developers, I'm analyzing their business plan, and I'm kind of viewing it like that. And more broadly, proof of stake actually has a lot of equity-like components, right? So when we think of shares of a company, you get voting rights based on your ownership stake of the company, which is how it's essentially a proof of stake model. And so, tokens that go in that route, I view more as like an equity. So Ethereum's kind of like a partially decentralized operating system, like Microsoft, for example. And so I treat it like that, which is somewhat different than how I treat Bitcoin, which is as money. So it's a more kind of rock solid decentralization, and it's more simple by design, and that has pros and cons to it.
We mentioned about also the functionality of Ethereum. I know for Bitcoin they're pushing layer two solutions, Lightning Network, etc. Do you think it's something that will be good enough also that there can be a lot of things built on top of Bitcoin, that it doesn't just become a medium of exchange or a store of value, that there will be more items that could be done off of it as well that could entail more value to people who would see it also as an asset?
Potentially, yes. And so, I mean, first I would take a step back and I would say that storing value and transmitting value that no one can block is already extremely valuable. So if it only ever does that, that's already a multi-trillion-dollar long-term opportunity. And so, for example, if you look at gold, but based on estimates for how much exists in the world, already mined, multiplied by its price, the estimated market capitalization is somewhere around $12 trillion. And that's purely as a store of value at this point. It's not really good for medium of exchange. Whereas Bitcoin has store of value properties, but then also has certain medium of exchange properties, right? So you don't want to use it on the base layer to buy coffee, but you can do that with a secondary layer, and it's ideal for international payments, permissionless payments, and so it's already potentially a larger addressable market than gold. Then when you add things like, for example, you know on the Lightning Network, you can have, like we're seeing Impervious AI. That's a company that is actually using the fact that, Bitcoin doesn't just transfer value, it can transfer data. And so you can make a distributed VPN, basically, decentralized video sharing, data sharing. And so that's actually some neat applications of Bitcoin. And we also see Sphinx Chat, for example, which is a social network built on top of Lightning. And so those types of applications could provide additional value. We've also seen some DeFi protocols launch on Bitcoin, right? So obviously they came later than on Ethereum. They don't have large network effects and liquidity yet, but it remains to be seen how they'll develop. So I would say that already the addressable market of Bitcoin is large, and then we have some of these other options as well.
When you saw Bitcoin as something that had large network effects, for the benefit of people watching this, at what year did you actually start getting in, and was its price at that time relevant to you investing? The reason why I'm asking this is people right now are saying that Bitcoin is at 40,000+. It may not be too early for me anymore. I'll just wait for it to go lower. What was your frame of mind at that point when you started?
Yeah, it's a really good question. So when I analyzed Bitcoin, I heard about it. I looked into it many, many years ago. But the first time that I wrote about it publicly and really took a look at it was 2017. And it was during that large bull run. And from that point, I looked at it when it was about, say, $7,000. And it was actually going up so quickly that when I started writing the article, it was like $6,500. And by the time I finished the article, like a week later, it was like 8,000. So we'll call it $7,000. And so I was analyzing it, and it had already had a very big run up. And there were a bunch of other questions, like it was splitting Bitcoin Cash and Bitcoin. We were seeing very strong price action out of Ethereum. Basically, we're seeing lots of different, distributed, protocols kind of competing. And so I was concerned about a couple of things. One was the big price run up. It looked too euphoric and expensive to me.